Cool, but bear with me. May 2024. Number 1. A trader had an opening capital of 3,900. If his drawings were 900 and his closing capital was 4,860, what was his net profit? Well, we know, or at least we're supposed to know, that opening capital add net profit minus drawings, and this is a question that repeats quite often, equals closing capital. They gave us opening capital, they gave us drawings, and they gave us closing capital, and they want us to work out net profit. So let's put in those figures. Opening capital is 3,900. We don't know what net profit is. We know drawings, which I spelled wrong by accident, is 900, and closing capital is 4,860. So we know that after we add opening capital to net profit, whenever we minus drawings, we get 4,860. So I'm going to add back that 900 to see what number I had when I add my opening capital to my net profit. I'm going to add that 900 back to closing capital. 4,860 plus 900 will give me 5,760. So now I know my opening capital plus my net profit is equal to 5,760. So all I have to do now is subtract my opening capital from this figure, and that will give me net profit, and that's how we get C, 1,860. Number 2. The main internal users of accounting information are, well, they said internal. Competitors, community, local communities, and government agencies are all outside of the company. So the answer is A. Number 3. Alright, number 3. Loans, creditors, and accrued expenses are all examples of liabilities, things that you owe. Number 4. Which of the following financial statements would directors' remuneration be found? Think of directors' remuneration as a big word for salary, and it's an expense which will be found in the profit and loss account. Number 5. For which of the following purposes are partnerships formed? Combining capital from different persons, yes. Benefiting from different skills and specializations, yes. Sharing ideas, expertise, and responsibilities, yes. So all 3. D. Number 6. They want to know what is total capital. So we use the accounting equation, assets take away liabilities are equal to capital. So our assets would be machinery, furniture, debtors, inventory, cash. So we add these figures up, 2,000 plus 5,000 plus 3,000, that's 28,000, plus 10,000, that's 38,000, plus 5,000, that's 43,000. And then we subtract our liabilities, which would be the bank overdraft and the creditors, which would be 7,000. That will leave us with 36,000. So our answer would be A. Let's move on. Number 7. What features of a partnership implies that each partner can be called upon to liquidate personal property in order to pay the business debts? This is one of the new questions, something that we would not have seen before in our multiple choice. And the answer here is unlimited liability. The amount that you can owe as a partner in a partnership is unlimited. Number 8. In a limited liability company, which of the following groups of persons is paid first after net profit is determined? So, the name preference should be a hint to you. The preference shareholders are paid first before ordinary shareholders. However, debenture holders are holders of debt, and a company must repay their debt first before paying any shareholders. So although you may think to put preference shareholders as the answer because they are definitely paid before ordinary shareholders, debenture holders are given the first priority. Number 9. Which of the following are profitability ratios? The net profit margin or net margin, yes. Gross margin, yes. Current ratio, no. That's a liquidity ratio. So the answer will be 1 and 2A. Number 10. Which of the following items are examples of current liabilities? This is a question that we see often. Mortgages could last up to 30 years, and current liabilities are things that you expect to owe for less than a year. So that will just be your accounts payable and your accrued wages. So the answer is C. So number 11, I believe there is an error. So they ask you what is the cost of 1 unit. So we want to know the cost per unit. So we add up our total cost, which would be 1,900 plus 2,000 plus 2,000, which is 5,900, and divided by your total units, which is 640. I've seen this question come before for years, for not only POA but OA as well. And the figures are normally different, and the answer normally works out to 10. But this time the answer works out to 9.2. So I'm still going to select C since it's the closest to the answer, but I believe CXC made an error there. Shocking, I know. Number 12, S&S Enterprises bought a motor vehicle valued at $250,000 to deliver goods. 3 years after the purchase, the motor vehicle was still being recorded at the original value. Which of the following accounting concepts was not applied? So, what they were supposed to do is record the lowest possible value of that asset, which would have been in accordance with the prudence concept. Number 13. Which of the following is true of a credit entry? Decrease bank loan? Nope. Increase cash at bank? Nope. Increase office equipment? Nope. Decrease in accounts receivable? Yes. When assets increase, you debit. When assets decrease, you credit. Accounts receivable is an asset and it's decreasing. Number 14, so they give us a cash book here. And they ask the opening balance indicates that the firm has $2,500 in a safe. No. So it's on the credit side of the bank column, which means they have an overdraft. In a safe, yes? Wow. Number 15, which of the following best describes the entries on the 8th of May, 2023? So if you see the 8th of May, there's a debit in the bank account, and then a credit in the cash account. A transaction that affects both cash and bank is called a contra entry. Number 16, what is the closing cash balance? So it's simple. You're going to add up the entire debit side, which is 1,750, and you're going to minus the credit side from it. And the balancing figure would be the closing balance. So 1,750 minus 150 would give you 1,600. So the answer is B. So far, so good. Number 17. A motor vehicle was credited from AG Motors to use in a business. How should this be recorded? This is a question that repeats. So you just got a motor vehicle, you're going to debit your motor vehicle account, and then now you AG Motors is owed some money, you're going to credit the account. Number 18 refers to the following information. They would like to know what the 529,800 represents, and that would be your total sales. Number 19, a credit balance brought forward on P. John's revenue account is $25. This means that for the year, $25 in rent revenue. So revenue accounts are credit accounts, right? When you have a revenue, you credit it, and then you debit to transfer to the income statement. So if you have a residual balance after you transfer to the income statement, that means you had more on the credit side that was meant for that period, because everything that is meant for the period is supposed to be transferred to the income statement. So anything remaining would be extra or prepaid. Number 20, which of the following items can be used to adjust the cash book balance before a bank reconciliation statement is prepared? So if you see late lodgements or bank lodgements or unpresented checks in the answer, then it's not it. So it can't be A, it cannot be C, it cannot be D. It has to be, well, B. Number 21, the debit side of the trial balance exceeds the credit side by $1,200. A suspense account should therefore be opened with a balance of, so if the debit side is bigger, then you will need the balance on the credit side in order to make both sides equal. So you're going to put 1,200 on the credit side to make both sides equal. Number 22, money spent by a company on the purchase or improvement of non-current assets is referred to as capital expenditure. When you buy or improve a fixed asset, it is called capital expenditure. Number 23 refers to the following information. They want to know what is the rate of inventory turnover. So the formula for this is your cost of sales divided by your average inventory. I'm going to calculate my average inventory by taking my opening inventory, adding it to my closing inventory, and dividing it by 2. And that would give me 18,500. And I'm going to divide my cost of sales by that figure. Cost of sales is 20,000. 20,000 divided by 18,500 will give me a 1.081. Number 24 refers to the following information. They want to know what amount will appear as purchases in the trading account. So they give us the creditors at the start of the year, creditors at the end of the year, cash payments to creditors. So let's take a look at this, right? Let's open a control account. Payables control account. The balance brought down at the start of the year would go on the credit side, 4,900. The balance carried down at the end of the year will be on the debit side. Remember, that balance at the end of the year, it's a balance brought down of 2,000, which should be on the credit side. For a balance brought down to be on the credit side, the balance carried down has to be on the debit side. So the balance at the end of the year, the balance carried down, will be here on the debit side. Right. Now, in our purchases ledger control account, anything that makes us owe more, we're going to credit. Anything that makes us owe less, we are going to debit. Because we are going to treat it like a liability account, right? So our credit purchases, we buying stuff on credit, is going to make us owe more. So that should be on the credit side. Our payments to suppliers, we paying them what we owe them, is going to make us owe less. So that would be on the debit side. We know that figure already, 15,000. Seeing that this account already balanced, that means the credit purchases that is missing is the balancing figure. So we're going to add up our debit side, which will be 15,000 plus 2,000, that's 17,000. And we are going to minus our credit side from it, which is 4,900. That would leave us with 12,100 as our credit purchases figure. But that's not our total purchases. Our total purchases is our cash purchases plus our credit purchases. So we're going to add our cash purchases to that figure. So 12,100 plus 5,800, that's going to give us 17,900, and that's how we get B as the answer. Item 25 refers to the following information. They want to know what's the cost of raw materials used in production. So they gave us prime cost, which is made up of direct material, which will be our raw materials used, direct wages or direct labor, and direct expenses. This question doesn't have any direct expenses. So they just gave us prime cost and direct wages. So the difference between prime cost and direct wages would be the direct materials that we are looking for, which is the cost of raw materials used. So we're going to take 89,850, excuse my handwriting, and we're going to minus direct wages of 66,000 from it. And that will give us 23,850 A. Number 26, which of the following will be treated as a prime cost? Your prime costs are all of your direct costs. There are 3 direct costs: direct material, direct labor, which will be your direct wages, or your direct expenses. And A, already we see that's the answer. Number 27, payments made to committee members in a cooperative are known as. So when you get paid for voluntary work, they call it something called an honorarium. So I know this would have been a question that few would have seen before, but the answer for 27 would be C. Number 28, they give us a petty cash book and they want to know what is the total of the float. So the balance brought forward is 15, and then they gave you $85. So that means the float would have been 85 plus 15, because 85 would have been to bring you back up to the float balance, which is 100. The number 29, the $85 in cash which was received on the 1st of August represents the restoration of the impress. So they're giving you back the money to bring you back to the float balance. So that would be B. Number 30, by how much should a petty cashier be reimbursed at the end of August? How much should the petty cashier? So the petty cashier should be reimbursed the amount of money that they spent, which would be the total of the total column. That's 10 plus 20 plus 14, which is 44, plus 25, which is 69, plus 30, 99. So the answer is D. Number 31, a public limited company issued a prospectus offering the shares described in the following table below at par value. We see this question all the time. The issue was fully subscribed. How much capital did they raise? That's $200,000 by $2 and $10,000 by $50, which is a total of $450,000. Number 32, the owner of a business does not keep proper accounting records, but she knows that her capital is 40,000. On the 1st of Jan and 85,000 on the 31st of December. She withdrew 1,000 in inventory for the year. What is her profit for the year? I always tell students, learn this formula. It always comes in some way. And look, it's here again. So we know opening cap, add net profit minus drawings equals closing cap. They said our opening capital was 40,000. We don't know what net profit is, but we know when we minus our drawings of 1,000 from opening capital plus net profit, we get a closing capital of 85,000. So I'm going to add back that drawings figure to see how much I had when I added my opening capital to my net profit. 85,000 plus 1,000 is 86,000, which means opening capital plus net profit is 86,000. So all I'm going to do is minus my opening capital of 40,000 from that 86,000, and that would give me net profit, which is B, 46,000. This question repeats a lot. I always tell students, learn that formula. You're going to need it one way or the other. Number 33, they want to know what the direct labor cost is. So operating a machine to create the good or service would definitely be a direct cost. The supervisor and the maintenance workers would be indirect costs because they would not be variable costs. The supervisor would be paid a salary. The maintenance worker will be paid based on the work he does, and that will have nothing to do with the level of production. And then the accountant has nothing to do with making it good at all in the first place. So he won't even be a production cost. So the answer here is just the machine operator, 6,000. Oops. Number 34 refers to the following account. Give us an appropriation account for a company. And he said, what conclusion could be drawn from this appropriation account? You've seen this question before. The company is engaged in profitable enterprise where they gave 26,000 in profit. So yes, the company is not doing so well. I don't know about that. $26,000 seems pretty good to me. More dividends can be given to ordinary shareholders. So if we look at the total on the debit side, that's the transfers to reserves, and the preference share dividends and the ordinary share dividends, that adds up to 21,450. Net profit is 26,106, which means they still have more net profit that they could use to pay to ordinary shareholders if they so desired. So 3 is also correct. So the answer is C, 1 and 3. Number 35, wages are usually paid weekly. Weekly. That's why all of those payroll questions, you have calculations to do per week. Number 36, on the 1st of June, P. Shark, sole proprietor, owed creditors 4,300. During the month, he paid 13,100 by check, and at the end of the month, his balance owing was 2,700. Cash purchases was 3,005. What is P. Shark's total purchases? We did a question similar to this already. Let's do it again. So let's look at our purchases control account. And remember, the balance brought down at the start will be on the credit side. So the amount he owed at the start, 4,300, is on the credit side. And then the balance at the end, the balance brought down would be a credit balance, which means the balance carried down must first be a debit balance. So the balance at the end, which is 2,700, that will be on the debit side. Now again, if it increases how much you owe, we credit. If it decreases how much you owe, you debit. So cash purchases, cash payments, or check payments, when we are paying off what we owe, that's going to reduce how much we owe, so we are going to debit that. So that check of $13,100 is going to go on the debit side. And seeing that our balance carried on and brought down are already in, then the one figure which is missing, which is our credit purchases, on the credit side will be the difference between the two sides. And remember, if we purchase on credit, it makes us owe more, which is why we credit it, right? So our credit purchases will be on the credit side, and it will be the difference between the two sides. The debit side right now adds up to $15,800, and the credit side is $4,003, which will leave a difference of $11,005. Now that is the total credit purchases. They want total purchases. Total purchases will be your credit purchases plus your cash purchases. Cash purchases was $3,500. So we're going to add that to our $11,500, and that will give us $15,000. Number 37. Mrs. Allen invested $20,000, and Mrs. Brown and Mr. Cable $5,000 each into a business. The loss sustained was $1,000. The partner is silent on how losses are shared but profits are split at a ratio of 2 to 2 to 1 in favor of Allen, Brown, and Cable. How much of the loss should Cable get? So, ladies and gentlemen, profits and losses are shared using the same ratio. So that 1, which represents Cable, will be made into a fraction of 1/5. I got that 5 by adding up all the numbers in the ratios, 2 plus 2 plus 1. So Cable gets 1/5, and then Allen and Brown will get 2/5 each. But we are looking at Cable for now. The loss was $1,000. 1/5 of $1,000 is B, 200. Number 38, which of the following ratios describes the liquidity position of a business? And the only liquidity ratio here is your asset test ratio. Number 39, what is the credit sales for the month of May? So, there's two ways we could do this. Like, we could do it like how we were doing it before, when we draw the T account, or we can just do some additions and some subtractions. I'm going to draw the T account just to make it a bit clearer for you all. Right, so this will be our sales ledger control account. Y'all, excuse my handwriting, sorry. Our balance brought down at the start, debit balance of $3,000. Our balance at the end will be a debit balance of $4,000. But in order to get that balance brought down of $4,000, it must first be a balance carried down, which will be on the opposite side of the brought down. So that balance carried down goes on the credit side. Now our debtors control account, or our sales ledger control account, we look at it as an asset account. If it increases, we debit. If it decreases, we credit. So if it's going to increase how much people owe us, we debit. If it's going to decrease how much people owe us, we credit. So credit sales, which would increase how much people owe us, will go on the debit side. But we're not sure what that is yet. So we're just going to put CSA, and we'll wait to work it out. Return inwards. If people return goods to us, they no longer owe for those goods, so it's decreasing, so we're going to credit that $500. Bad debts. If we're writing them off as a bad debt, we are not expecting that money anymore, so it's decreasing how much they owe us, we're going to credit that $200. Discount allowed. If we give them a discount, they no longer owe us for that discount, so we're going to credit it $100. Check payments received from accounts receivable. If they pay us what they owe us, they no longer owe us that money, so that's also going to be credited. Now, since the balancing figures are already in, the one number that's missing, our credit sales, will be the new balancing figure. So I'm going to add up everything on the credit side and subtract it from the debit side, and the difference will be my credit sales. So 7,000 plus 4,000, which is 11,000. Add 500, 200, and 100, which will give us 11,800. And then we're going to minus that 3,000 from it, which will give us 8,800. So our total credit sales will be B, 8,800. Number 40, on the 31st of May, it was discovered that a customer's check of 150 had been dishonored. What will be in case updated sales ledger control account balance? So initially, when the person paid that 150, we would have credited our sales ledger control account because that person now owes us less. And remember, as we said, when it decreases how much they owe us, we credit. But now that it's dishonored, that means they owe us that 150 again. So we just increased. So we are going to debit that 150. Now that we have that 150 on the debit side, that balance carry down of 4,000 is now going to change. We would have initially added up the debit side and minus the credit side to get that 4,000. Now the debit side is bigger by 150. That's going to make the difference between the both sides bigger by 150. So the answer is going to be D, 4,150. Number 41, Rose contributed $7,000 in cash and a motor vehicle with $3,000 into a partnership. So once you invest any assets into a business, it is considered capital. Capital is always credited, so you're going to credit your capital 10,000. Then you will debit your cash 7,000 because the business cash just increased, and you're going to debit motor vehicle 3,000. Still have no idea where they get in a car for 3,000. That have to be a really nice bicycle or something. Anyway, so you're going to debit your cash, you're going to debit your motor vehicle, you're going to credit capital. Number 42. This is a question that we've seen before. Elan bought goods with $630 on credit. He received a 3% trade discount. Immediately when you get a trade discount, it is subtracted. You've already earned it by buying in bulk. So we're going to minus that 3% from the 630. That leaves us with $611.10. Then they say the invoice stated 2% 20 days net 30, which means if you pay your money within 20 days, you earn another 2% discount. Elan apparently paid his goods on the 8th of March, which is 6 days after. So he earned himself that 2% discount. So we're going to minus that 2% from $611.10, and that will leave us with B, $598.88. $598.88. Number 43, in a partnership agreement, which of the following transactions is compulsory, and the only one that's compulsory is the sharing of profits. Number 44, to which account should depreciation of office machinery be transferred? It is an expense, and the expenses are located in the profit and loss section of the income statement. Number 45 and 46 refer to the following information. They want to know what is the asset test ratio. So the asset test ratio would be your current assets without your inventory divided by your current liabilities. So that would be your cash in hand and your debtors, which is 11,000, divided by your current liabilities, which would be your creditors and your rates owing, which is 2,000. 11,000 divided by 2,000 is 5.5. So the answer will be 5.5 to 1. Number 46, what is the current ratio for the period? So that will be all of your current assets divided by your current liabilities. So we're going to include inventory on this one, which will bring the number up to 12,000. And we're going to divide it by our current liabilities of 2,000. 12,000 divided by 2,000 is 6. So the answer will be D, 6:1. Number 47. What will be the accounting entry for the recording of the allowance for doubtful debts in 2022? So in 2021, the provision for doubtful debts, or the allowance for doubtful debts, would have been 2% of 6,000. 2% of 6,000 is equal to $120. So let me put that in one time. So in 2021, provision for doubtful debts, $120. 2022 now, the provision for doubtful debts is 2% of 5,000, which is equal to $100. So what's happening is that it's decreasing by 20. For our provision for doubtful debts, we always record the change in provision. If it's increasing, the amount it increased by is credited in a provision for doubtful debts account and then debited in the income statement, so it's recorded as an expense. If it decreases, the amount it decreased by is debited in the allowance for doubtful debts and credited in the income statement, so it's recorded as a revenue. In this case, it's decreasing by 20, so we are going to debit your provision for doubtful debts and credit your profit and loss account to record it as a revenue. So 47 is A. 48, a debt is considered a bad debt if the account receivable fails to pay. This comes kind of often. Number 49, in the records of the bank, the opening balance represents. Now the key part to this question is in the records of the bank. So to me, in my records, my balance is an asset. But when I put that money in the bank, for the bank, they would view it as a liability because they owe that money to me. They are holding that money for me, it's not theirs. So the answer for 49 is actually C. Number 50. What is the balance carried down at the end of the period? So we're going to add up. We're going to check to see which side is bigger. And then we're going to add the bigger side and subtract the smaller side from it. So the debit side is equal to 16,600. And the credit side is equal to 17,400. So the credit side is bigger than the debit side. So we're going to take the credit side and subtract the debit side from it. 17,400 take away 16,600, and that will leave us with 800. Right? They want to know what's the balance carried down. The balance carried down will be located on the smaller side, which is the debit side. So the answer will be A, 800. Number 51 refers to the following list of balances. Based on the information above, the working capital, so the working capital will be your current assets, take away your current liabilities. My current assets here will be my cash at hand and bank, trade receivables, and inventory at hand, which adds up to 5, 6, 7, 12,000. My current liabilities would be my trade payables and my accrued expenses, which would be 5,500. 12,000 take away 5,500 will give me 6,500. So the answer is B. So again, I add up all my current assets, which gives me 12,000, and I minus my current liabilities, which gives me 5,005. 12,000 take away 5,005, 6,005. Number 52, they want to know what is the cost of production for Jesse Manufacturing Limited. And for your manufacturing account, you do 4 things, it's just 4 things. Prime costs, add factory overheads, add opening work in progress, minus closing work in progress. Prime cost plus factory overheads will give you 35,000. You add opening work in progress, that gives you 40,000. You minus closing work in progress, that gives you 37,000. The answer is C. Number 53. If revenue expenditure is overstated, which of the following items are affected? So you subtract your revenue expenditure or your expenses to calculate net profit. So if your expenditure is increased, that's going to reduce your net profit. So your profit is what will be affected. Number 54. The total of the return and outwards journal is transferred to A, the debit side of the purchases account, B, the credit side of the purchases account, C, the debit side of the return outwards account, or D, the credit side of the return outwards account. It would go to the credit side. What I do, I use an acronym called PRIDE. PRIDE stands for purchases, return inwards, drawings, and expenses. They are always debited. All other accounts, not accounting for assets, liabilities, and capital, all other accounts are always credited, and that includes return outwards. Number 55. What is the total closing capital? Again, we see this question. I told you all, learn this formula. It came 3 times in January, and it's coming 3 times again in May, June. Told you all, don't say I didn't warn you all. So again, we are going to use the same formula. Opening capital, add net profit minus drawings. The only difference is, instead of net profit is a loss. So instead of adding net profit, we're going to subtract the loss. So opening capital is 3,000. We minus our net loss of 1,500, which leaves us with 1,500. Then we minus that drawings of 500, which will leave us with 1,000 as our closing capital. Number 56 and 57 refer to the following information, which shows the receipts and payments for a youth group. What is the opening bank balance? So what I'm going to do, because they gave us our closing balance and they gave us some transactions, I'm going to add all the money we received and subtract all the money we paid. So donations received, fees collected, receipts from SA competition, all that would be receipts, money we received. That would add up to 2,000 plus 9,600, that's 11,600, plus 4,000, that's 15,600. Now I'm going to subtract my payments, which will be my purchases of prizes for the SA competition and purchases of photocopiers. So 15,600 take away 8,000, that will leave me with 7,600. So I had an opening balance, then I got a 7,600 increase, and that brought me to 10,000. So my opening balance has to be 10,000 minus 7,600, which is 2,400. And I could work it back to make sure. So if my opening balance is 2,400 and I got a 7,600 increase, my closing balance would now be 2,400 plus 7,600, which works out to, you guessed it, the closing balance at bank of 10,000. Number 57, what is total capital expenditure? Capital expenditure is when you buy or improve a fixed asset. The only fixed asset purchase here is the photocopiers. So number 57 would be B, 6,000. Number 58. An asset purchased for 1,000 depreciates at a rate of 10% per annum using the reducing balance method. What is the book value of the asset at the beginning of the 3rd year? So in the first year, it would have lost 10% of 1,000, which is 100. So the value is now 900. At the end of the second year, we would have lost 10% of 900, which is 90, which makes the value 810. That means it starts off the third year with the value of 810. Number 59, they want to know what is charity's closing bank balance at the end of the year. So the opening balance was $3,000. Received receipts from barbecues, receipts from donations, and receipts from a garage sale. So that's 9,000 receipts. And then one payment of 1,000. So that 9,000 in receipts would have raised the opening bank balance to 12,000, and then that 1,000 in operating expenses would have reduced it to 11,000. So 59 is B. And then last but not least, number 60, the inventory was purchased from M. Smith on credit for $2,400, but posted to N. Smith's account. Which of the following journal entries would correct this error? So, when you purchase, you would debit your purchases account, and you would credit whoever you purchased from. So, I was supposed to credit M. Smith, but instead I credit N. Smith's account. So I'm going to debit N. Smith to take it out of his account and put it into M. Smith on the credit side where it's supposed to be. So the answer here would be D. And that brings us to an end of May 2024 Paper 1. How did you do? Let me know in the comments. Enjoy the rest of your day and good luck with your studies.